5 months ago, I uploaded my first video onto this channel in regards to Kyle Does Finance. And since then, I have invested more into my dividend portfolio and it's kind of gone dry on this channel. So I wanted to, when I went into 2022, record more videos on this channel and sort of become transparent with you guys and keep you updated with my finance side of things. So since then, I have put more money into the stock market and had a real look and plan about how I want to make money in terms of my passive income and how I'm going to do this moving forward. Now, a quick little about me. I am a third-year adult student nurse from England, UK, and the reason why I say this is because that's quite rare on YouTube. I've never really seen anyone within the medical field sort of talking about money and stock market and affiliate marketing and making money. And there's probably a reason for this, because within the profession that I'm in, although it's an amazing profession, it isn't that well paid. Although this video will be going over, as you've seen in the title, my dividend portfolio for January, I will mention how I am planning to build my passive income here online and what that kind of entails for me. Many people will be different, and I would love to, meet some like-minded people along the way. I guess that's really important, and it's kind of the reason why I wanted to make this channel as well. I'm just a beginner starting off and making this journey, and I wanted to document that moving forward. So if you have any suggestions, please drop them below, and I guess we can sort of build this community together. So quickly, why did I get into dividend investing? So I started my investing journey in 2020 during the outbreak of the pandemic, when it was very easy to make money online. It was very easy to sort of put money onto a stock, and whatever you put your money into, it will raise because of the recovery of the pandemic. Since then, and being invested into the stock market and learning the ropes, you do then build experience, and you do make some wrong trades, and you do make some good trades, and you go through phases of like what I did when you go through the meme stocks. You go through investing into bad companies and bad decisions, but you also learn what good companies are and what would you suggest a good company is. And it was only until halfway through 2021 where I wanted to invest in good companies and build this passive income rather than sort of get rich, get quick scheme that people sort of promote very openly online. So I was watching videos on YouTube and seeing how these people were making the portfolios going through the roof, and I was like, oh, I'd love to do that, and I kind of got into the trap of doing that. And although I didn't lose money of this, I took the profit and I went back to the basics and invested in companies I truly believe in. So for me, I like dividend investing because you can buy really, really good companies who you trust, and with your due diligence that you make, the company then can pay you with the dividend. So each stock, if you don't know, and if you're completely new to dividend investing, each stock has a different dividend yield. And over time, just like as you put money into, let's say, the S&P 500, if these stocks go up in terms of their value, and you'd also reinvest your dividends as well. And that was kind of the reason why I went into dividend investing. Alongside this, you're probably thinking, well, you can do that with any investing. I liked how with dividend investing, you can buy companies that you truly believe in, that you have done your research on, your due diligence on, and they're a very, very good company, but you know that and you can sleep well at night, and they pay you a dividend to hold the company. That really enticed me in, and I wanted to learn more. And since then, since 2021, I've been doing my research and reading loads of books, which I will leave in the comments, in the description down below, of the books I recommend, because I feel that's really, really important. Just starting off in the stock market, I think just read some books around personal finance, and it kind of changes your perspective, and that really changed the momentum for me. I wish I did that right at the start. So yes, I looked into companies that I truly believed in, did my due diligence, and then I first started this portfolio. And at the moment, I haven't invested in all the companies that I would like to invest in, because I wouldn't see them as a fair value which I want to invest in. I think some of them are overvalued, so I don't buy them. I buy companies I truly believe in at a good price, and I'm gonna touch on that in a little while. So quickly, before I do jump into my dividend portfolio, I do just want to touch on how I would and planning on making money online and making passive income to then help me build my wealth in later life, really. I feel as though, first of all, I am obviously a nurse, well, student nurse. I'm currently in my training, I'm in my final year, so I plan to keep this job. I plan to keep this income and work. This normally means working 12-hour shifts, 12.5-hour shifts, and with that I will have an income stream that I can sort of live off at the moment. And in the meantime of doing this, I then want to make a YouTube channel where it can build a community, meet people and like-minded people and learn from each other, but also it can build some revenue as well. And this would be my first passive income that I want to make in the long term. So for this channel, although I can't monetize my videos now because I haven't got enough subscribers and watch time, this would be something that I would be really interested in moving forward, and how I plan to build my passive income in the future. Secondly, and this kind of works alongside the channel, I'm looking and trying to get more into affiliate marketing. If you don't know what affiliate marketing is, it's basically when you promote something else in maybe a website or a video like this one, and I could say, like I said earlier, for example, I would recommend some books that I truly believe in. I would leave them in the comments and you guys would click on them and potentially buy them. If you brought them, I would get a small commission from the purchase that you made. You'll be happy because I recommended some good products and recommended something that I'm interested in and helped me, and I will also be happy because I've earned a little bit of income from that. So if that makes sense. That's what affiliate marketing is on a small basis, and you can become very successful from it. If you're interested in affiliate marketing, definitely YouTube it. It is very eye-opening and you would probably want to do it. So if you do like the sound of that, definitely YouTube it, and I will be talking about that in another video. So if you are interested in that, make sure you do like and subscribe down below. Eventually, when I do build up a little bit of a portfolio and some money, I will then go into the property development once I have some money under my belt. This may be within the 5 years time after I've qualified and got some money from all the other income streams that I'm considering to make. What I want to do with this is buy a property, redo it up, so it's called the BRRR strategy. Buy it, renovate, refinance, and then redo. So you basically just loop it. You buy a property, you do it up, and you refinance. So you do it on and you take your money out, you bring that up to the value it is, and then you would have the mortgage at that value. And this is something I'm really interested in and something I want to learn more of as I get closer to doing that. And I definitely will be taking you guys on that side of the journey as well. So if you are interested in that, please make sure you do, again, like and subscribe down below. Lastly, and kind of the reason for this whole video, is my dividend portfolio. And you're probably thinking, well, this isn't passive income. Well, it kind of is, because if, for example, I hold Coca-Cola stock, I could be investing in another company. The money that stays in there, although the value of the stock may fluctuate, they'll be paying me a dividend. And there's kind of an argue whether dividend investing is passive income. I feel like it is, and I know many people do as well, but there is this kind of, is it, isn't it? It is, because it's a company paying you and you don't need to work for it, if that makes sense. You could not put any work into this dividend investing and they will still pay you. So for me, that would be passive income. So those are 4 passive income streams that I want to build up on the long run, and I'm going to be just discussing all 4 of them in more detail in more videos to come. So I'm just kind of wanted to touch on them here so you kind of know my strategy, and then next time there are always going to be separate videos for those. Okay, so let's get into my dividend portfolio over on Trading 212. So at the current recording of this video, it is February, but if we go over to, let's say, the start of January, my portfolio was worth £696.64. So that is the value of the portfolio as I record this video now. So All the stocks here are the ones I own. All of them are dividend stocks, bar Disney, which is a dividend stock, but they've just, during the pandemic, has sort of withheld the dividends at the moment, but this is sort of a long-term plan for me, and they will be bringing back their dividends at some point. So I'm going to go over the stocks, talk about my average price, the value of the stock, if I will be buying more potentially in the near future, if I get some more cash. So the first stock is 3M, ticker symbol MMM. This is a US stock. Most of the stocks I own are US stocks. I currently own 0.38 shares of this at a current price, average price, sorry, of $174.62. The value of this position is £45.46. I felt as though I got 3M at a good price. I've seen it as an intrinsic value of between 160 to 180. But it's sort of been dropping and dropping ever since. So for me, a very good price to add to, and once I do have some money from some side hustles that I do, I will be buying some more of this company. The next stock is ABBVIE, ABBV ticker symbol. The current shares I own is 1.46 shares at a current average price of $109.12. The current value of this stock is £153.04, and I'm currently up 32%. This has obviously been impacted with the FX impact as well. Currently, of the stock I do, I am up 30%, but this has obviously increased with the FX impact. So, very happy with this. It's done very well for me, and it's a company that I'm going to be holding long term. All of these companies I'm going to be looking at adding long term. My strategy is holding companies that I truly believe in, know about, do all the research I'm interested in, potentially use every day, and this then will build my confidence when I do sleep at night, and if it does drop or we have another market crash, that I will hold these companies until I retire. So these are companies that I want to hold for a 30-year time horizon in the market. And all these values of the stocks I do own are low at the moment, but like I said, I will be chipping away and adding more at values I do see as fair. Next company is American Tower, ticker symbol AMT. The current value of it at the moment is $236.89. However, my position is average price of $247.67. I currently own 0.07 shares at a value of £12.97. Similar to 3M, I feel as though it's a good price to buy. I mean, it's only been up 3.97% of the year. If you look at if you zoom out, which I always like to do, if you zoom out, you kind of see the long-term growth of the company. We are at a good price. I sort of bought when it dipped a little bit because I felt it was a good buying opportunity, but it has dipped even more. So I will consider adding more, probably once we reach around the 227 mark. Next company is Apple, ticker symbol AAPL. I currently own 0.26 shares of Apple at a value of £32.83. This is an average price of $158.66. It's kind of getting confusing talking about pounds and dollars. It's just, yeah. I'm currently up 6.87% on Apple. This is 6% with the gain and 0.67% of the FX impact. ExxonMobil, I brought it when it was quite low. As you can see, I'm 28% up. I don't own that much of it because when it did shoot, and I feel as though with the company I can get it at a better value personally. So this obviously isn't financial advice, but I'm going to wait and see if it comes down more once we start going through all the rise of the surge of the energy stocks, and we'll buy more as we go through the year basically. So hopefully it does drop because I do like ExxonMobil. It's got a good dividend yield of 4.5%, so I would like to add more. Next company I own is Intel, ticker symbol INTC. I do own 1.04 shares of Intel at a average price of $51.58. This is a current value for me at £36.54. 54%. A current value for me is £36.54. The current return on this, I'm currently actually down 7.8%, and if we look at the 3 months and the year, it has just sort of been tumbling. But if we go over max like I do, I like to zoom out. It is a growing company, and I do really believe in Intel, and I wanted to get some exposure into the semiconductors industry. So I like Intel, I use Intel a lot, and that's the reason for the company. I like looking at companies that I truly believe in, and when I research the companies, I like to know that I use them and believe in them. Next company I own is Lockheed Martin, ticker symbol LMT. I am up very well on this investment, 11% again. Again, it's not a lot. I just wanted to put in the initial investment because I seen it as a good chance to buy in. I only own 0.02 shares at the moment, and again, this will be added on in the long term as well for me. My average price is $353.71, and over the long term, I will be reinvesting all of the dividends that I receive from all of these stocks. Next company I own is Medtronic, MDT, ticker symbol. I'm currently down 3.2% on this. I own 0.25 shares at an average price of $106.58. This is, for me, a value of £19.33. If we look at the year, it is down a lot. I see it as a buy, again, not financial advice for me. I want it to sort of be around $100, and that's when I will add more into this as well. The next, and probably one of my favourite, is Microsoft, ticker symbol MSFT. I have £119 invested into Microsoft at the moment, but I'm currently down 4%. This means I own 0.54 shares at an average price of $306.73. If we look at the year, it is up 20%. If we go maximum, I mean, look at that. It's a brilliant company, brilliant growth rate, and I just love Microsoft. So another company, again, that I'm going to be holding long term. The next company, which I wanted to get more exposure into the utility sector, is NextEra, ticker symbol NEE. I currently own 0.82 shares of this company at an average price of $79.03. My current value of this at the moment is £45.78, and I'm currently 5% down. And again, like all my other stocks, I'm going to be reinvesting in these companies with my dividends and adding more when I feel it is the right time to buy. Again, another favourite for me, Starbucks, ticker symbol SBUX. Currently own 0.79 shares and adding every time it drops, but at the minute it seems to be dropping quite a lot, and again, I've run out of money, so I can't add some more money into this at the moment. But average price of $103.48, and I currently have £55.22 invested into this. I'm currently down 9.53%. I'm going to consider adding into this company as we go. Verizon, ticker symbol VZ. I own 1.37 shares of Verizon at a average price of $52.26. This means I have £54 and 10 pence invested into Verizon, and I'm currently up 0.52%. If we go over the year, it does seem to be recovering now, and hopefully this means that it starts to go up. It has just paid out its dividends, which I'll go over in a moment. The next stock I own is Visa, ticker symbol V. This is a growth stock again that I want to be invested in. It's a small dividend yield, but when you reinvest these dividends and you consider the dividend growth rate and the growth rate of the company, that's when the snowball happens. I own 0.18 shares of Visa, and this is an average price of $215.33. It's a current value for me at £30.37. I'm currently at 4.15% or 4.2% if you can say, and I'm going to be considering adding to Visa long term. The last company that I'm currently invested in is Walt Disney, ticker symbol DIS, D-I-S. I currently own 0.69 shares of Disney. Very, very bullish on Disney I am. I have an average price of $152.54 at a current value for me at £76.21. Currently down 2.82%. We did have quite a big drop down to $133, and we have had quite a good recovery because they completely smashed earnings out, which I knew they would. If we go over the year, it has had quite a a downward turn, 21% down. So for me, it was a brilliant chance to get into Disney, and I can't wait for them to open up all their parks as they are and just watch this company grow. Okay, so this is editing Kyle here. This is like way on as after I've edited this video. Basically, I've realized that I've either deleted or not recorded sort of talking about my dividends, and I think that's really important to include in with my portfolio updates, because it allows you guys to see how much I earned in dividends, and it allows me to look back and see sort of how much I earned as well, even though I can track it on my trackmydividends.com. So I'm just gonna sort of tell you guys how much I've earned in dividends, and then sort of see how much this is earned in January back in 2022. So in January, we received £7 overall. We've received £7.44 in dividends since I've started this portfolio. And as you can see, those are the ones that I received in December. And then we've got the first dividend that we received on the 3rd of January. This was the dividend from the Vanguard S&P 500 on my dividend trading 212. It's called VOO. Then we've got Ultra Group at 86 pence. This was my second dividend on the 11th of January. I then received on the 17th of January Leggett & Platt at 12p. I actually sold Leggett & Platt. I brought it at a good price, and then I sold it because I wanted to invest in companies that I truly believed in and had good growth rates. I then invested into Cardinal Health and sort of sold this as well. I received 24 pence in dividends from Cardinal Health. Again, I sold this like I just mentioned, so I do not keep this now in with the portfolio, but those are the stocks I received dividends from